Okay, folks, welcome to Market Wrap for the 9th of November. What we're going to talk about on this video is the closing price action of the major averages. We will talk about Coinbase's earnings after hours. They're taking a nosedive. And then we're going to segue over and into our members strategy session where we review our positions, watch stocks, and our game plan for the remainder of the week. And we'll begin to dip our toe into a strategy about next week. So if you are a member, head on over to the website. The full version is published there. And if you're not currently a member and you want the full version, sign up for the 14-day free trial offer. Let's get to it. Okay, we had Coinbase's earnings after hours, and I was looking at their premiums. I was thinking about doing an earnings trade on Coinbase, and the market maker anticipated move was about a 30-odd point move. I usually try to double that, and I couldn't get the premiums I wanted to take on the risk. So we walked away from it, and you could see that we sold off hard here in the after hours. We have since bounced off the 302.50 mark. Does that hold? Not quite sure. Too volatile. Glad I didn't get involved. You gotta, when you do these options trades, meaning when you're trading earnings, you really need to look at where there is historical support to place your puts. And now when I'm saying when you trade options, I'm saying selling options, not buying options. So it's important to know where your support levels are. $300, which is around where we bounced, that psychological support. So I understand that. Will that hold up later on? Not quite sure. So let's take a quick peek at their earnings. Revenues missed. I'm seeing some pretty good numbers here. Their subscription and services revenues at 145 versus consensus of 108. That's a beat there. I'm not quite sure what the problem is here. Retail monthly transacting users, 7.4 million versus consensus of 7. That's a beat. Q3 verified users at 73 versus consensus at 72.6. That's a beat. Coinbase trading, total trading volume, 327 billion versus consensus of 313.6 billion. That's a beat. I'm not exactly sure. I guess they segmented out the subscriptions and services, and they missed on revenues in another segment of the business, or just the net effect of certain segments of the business missing on revenues offset the beat on subscription and services. So this is going to be an interesting one. I'm not shocked to see it bounce back here, given the what appears to be fairly good earnings. I don't know what their guidance is going to be, but that's Coinbase. We'll keep an eye on it for tomorrow. Certainly a watch stock. If they're going to throw the baby out with the bathwater, we've traded this one before. We'll be more than happy to trade it again in the future. Now, let's move on to Market Wrap. And folks, here's what I had to say last night about the VIX, the S&P 500, and the transports. Take a listen. I went over this with members that the weekly chart of the VIX, we had two back-to-back up weeks on the VIX, but yet you had the S&P 500 moving up higher as well. That is not a bullish sign for the S&P 500 because somebody out there was hedging their long bets or taking a net short position against the S&P 500 using VIX contracts. So this week, we have popped our nose above resistance. Will it close there? Way too early in the week to make that call. Back to the daily chart. But the indicators are looking very good. RSI rising, Stokes rising. A bit of a doji star formation on the day, W formation on the price action. It looks pretty bullish to me, folks. Therefore, bearish for the S&P 500. Dow Transport. Beware here. We had a major, I think it's a potential blow-off top last week on the Dow Transports. I mean, this was insanity, this move. Watch for a break of support here on the Dow Transports. You're seeing a lot of topping action. MACD histogram losing momentum. Be careful here. S&P 500 daily chart, hollow-filled candlesticks, more signs of topping action. We discussed this over the weekend, that I was concerned that we were seeing signs of a short-term top here. We're still getting those signs, folks. RSI and the S&P 500, it's 77. It's no joke. So leading things off with the VIX surged today. Yes, we backed off the highs of the session. You saw some buying of the market late in the afternoon. A close above this 18.06 mark would have been an indicator that we probably will head higher on the VIX. Right now, 50-50. The Dow Transports, I had warned, beware. This was not a bullish setup. This was a bearish setup. Watch for a breakdown below this lower band of support. Last week may have been a parabolic blow off top. Sure enough, today we got the break on the Dow Transports. Volume was very light. Indicators are not looking good. MACD is probably going to go negative by the end of the week. Your stochastics are probably going to be trading down below 50 at the close tomorrow. Whenever you get your stochastics, in particular when they're trading down below 50 and declining, rallies tend to fade. Beware of morning rallies because by the afternoon, they fade. They turn red. The S&P 500 daily chart. I had warned, beware. The VIX was sending you a message. People were buying VIX contracts. They only do that when they're bearish of the S&P 500. Yet the S&P 500 was moving up higher, so people were buying insurance against an anticipated sell-off. You saw topping action on Friday, then again on Monday. Today, follow through to the downside. Volume was very light. So what this is telling us, the volume, is that you're not seeing a bunch of institutions move in and selling the market. But it is a warning flag, and it should be telling you, you know what? If you have too much risk out there, if you're too long of this market, maybe it's time to take some off the table. You got profits, make some of it real. The Dow Jones Industrial Average, daily chart, same deal here. Topping action Friday, Monday. Yes, both days were up days, but all up days are not made equal. Today, we pulled back on light volume. The trip Qs, outside reversal bar on the day. And what's concerning about this move on technology is that when you take a look at bonds, bond yields, they drop. Generally, technology does well when bond yields pull back. Bond yields broke down today, and technology pulled back as well. That's a tell. Beware. The small caps. Several days worth of topping action resulting in a follow through to the downside. Is there more downside here? Probably. Volume very high and yields pulled back today. Small caps don't like declining yields. They like rising yields because they interpret it. Traders interpret that as a growing economy. Good for the small caps, good for the transports. Not so great for high beta tech. The banks held up fairly well, to be honest with you. We opened up a position on the banks last week. I'm not ready to go adding here, not with yields pulling back and these stokes weakening up here. And in fact, we're going to raise stops here on the banks. Members will talk more about that on the strategy session later on in this commentary. Volume high. Technology. I warned about this last night that we were very overbought. RSI was around 80, just shy of 80 last night. That wasn't going to be sustainable. Today we pulled back. Volume rose, but was still well below average. So not a ton of institutional selling here today. Consumer discretionaries caught it on the chin. Down 1.85%. We knew this was coming. You saw a parabolic move up higher. Some topping action on Friday. Monday, bearish key reversal bar. Today, continuation breakdown bar. How was volume? Oh, look at this volume. That's institutional distribution. This is not mom and pop selling 100 shares of the XOY. This is Goldman Sachs, Morgan Stanley, the banksters. Energy. Not a bad day for energy. Not a bad day at all. Our energy stocks, our energy trades did really, really well today. Energy had broken out yesterday, pulled back and did a retest of the breakout point today. Bullish key reversal bar, energy going up higher. Members, we'll talk about our energy stocks in a moment. Volume was light though. Beware. Let's memorialize this. Just beware of this. We'd like to have seen volume higher, but we're declining sequentially. So that's a bit of a warning flag on the track. You never know if you're going to get a bull trap. And volume is one indicator that we use to identify all things may not be well on a breakout. Emerging markets pulled back today and gave up support despite the fact you had yields pull back, despite you had the dollar pull back. Emerging markets pulled back as well, surprising. Could be due to China. 30% of the EDC is China. Let's bring up Yang really quick. That's the short ETF of China. Yep, China. It was up. So Yang short ETF up means China was down. Gold, daily view, very nice. Another bullish key reversal bar on the day. I think we're going up to 1850. I think gold's going up higher. So members, let's segue on over and into our positions and talk about our gold stocks, our inflation portfolio, which has not been doing well. Admittedly, you've had a move into these past couple of months into small caps, into technology, but now you're seeing a sea change where you're seeing gold stocks get bid. And when did they do that? They did it right after the Federal Reserve announced taper. Counterintuitive, but there's historical precedence for this happening before. As soon as the Federal Reserve begins to do any hawkish activity, gold begins to move up higher. Why? It's because the economy can't take the hawkish activity, and the markets predict there's going to be a soon reversion back to what was working before. What was that? QE, to get the stock market moving up higher. I don't make it up. And with that, members, let's segue over into the strategy session. If you're not currently a member, sign up for the 14-day free trial offer. Let's get started. Let's begin with the GDXJ, up another 1.64% on the day on a bullish key reversal bar, meaning we traded below support, we reversed to close higher. What's the wear through from here?